Kennedy's tax plan. President Kennedy says he wants tax reduction to stimulate business expansion, but his tax proposals would do the opposite. They would strike a blow at the American middle class, which is the backbone of private capitalism. At first, the president said he would not accept tax reduction without tax reform. A month later, he said he would be satisfied with tax reduction alone. I don't think the president changed his mind. I think he wants to convert the United States into a total socialist state, and that he sees his tax plan as a great step toward that end, with or without the reform. Yet he would have an alibi against disastrous consequences if Congress made the slightest alteration in his tax plan. The only way for Kennedy to lose is for Congress to reject his whole tax plan. The only way for the nation to win is for Congress to take steps for repeal of the income tax system. That is a summary of my report on Kennedy's tax plan. The full report after a message from my sponsor. President Kennedy's tax plan, proposed in January 1963, recommended tax reductions totaling $13.6 billion, tax increases totaling $3.3 billion, leaving net tax reduction of around $10 billion. The stated purpose is to stimulate business expansion, but the reduction proposed would do little of such stimulating. The primary reductions proposed would go to individuals in low-income brackets who spend their money on consumer goods, investing relatively little in business enterprise. The president, whose tax plan was conceived in Europe and devised by the AFL-CIO, holds the labor union trickle-up theory about business expansion. The president would give low-income taxpayers a reduction of about $10 billion. That is, if we ignore the fact that he will take away much of this reduction by increasing their payroll taxes for Social Security. Now, the purpose of this proposed reduction is to increase consumer buying. The purpose of increasing consumer buying is to increase business profits. The purpose of increasing business profits is to give businessmen more money for investment in business expansion. To logical persons, this may seem devious and complicated. If you want businessmen to have more money for investment in expansion, why not relieve them directly of confiscatory taxation, which has been piled on them as emergency wartime tax ever since 1950? Taking 52% of a corporation's profits, the United States government harasses and hamstrings business considerably more than the fascist regimes of Mussolini and Hitler ever did. The biggest tax that Mussolini ever levied on corporations was 40%. The highest that Hitler levied was 44%. Although the president's tax and budget plans were conceived by European economists and bankers, the president and his advisors ignored the experience of West Germany, which has enjoyed the most phenomenal business and industrial growth in modern history. The West Germans attribute much of their spectacular growth to American foreign aid, but a great deal of it is attributable to their own governmental policies. Policies of keeping governmental expenditures to a minimum, of reducing governmental controls over business and industry, of substantial tax reductions and concessions to industries in order to leave them enough of their earned profits for reinvestment in expansion. President Kennedy himself says that the corporate tax rate of 52% gives the government today a majority interest in profits. In his tax proposals, the president does recommend a reduction of about $2.6 billion in corporate taxes, reducing the rates from 52 to 47%. The president wants tax reduction for immediate stimulation of business expansion, he says. Yet his proposed reduction on corporate taxes would not go into effect until 1965. Moreover, the president recommends an immediate speed-up in the payment of corporation taxes, which would require a doubling up in corporate tax payments in such a way that it would be 5 years before corporations would have as much left for expansion after federal income taxes as they now have. The reason for the speed-up in corporate tax payments is to regain a portion of the income the government would lose by the proposed tax reductions. Another portion of the income lost through tax reduction would be regained by eliminating exclusion provisions with regard to income from dividends. Dividend income income which individuals get from their investment in stocks of business firms, is subject to double taxation. A corporation pays the federal government a 52% tax on profits. After that tax is paid, some of the remaining profits, if any, are distributed to the people who own the business, that is, stockholders. The stockholders then pay a personal income tax on their share of the corporation profits, which have already paid 52%. To give partial and minor relief from this inequity, tax laws now exclude a small portion of dividend income from double taxation. The President would deny this relief and would thus further discourage private investment in business expansion. The major tax increase to offset the loss of revenue from tax reductions is to be achieved by restricting individual deductions for local and state taxes, interest payments, and charitable contributions. This is the most sinister portion of the President's tax plan. The President's proposed tax rate reduction would give some benefits to the great American middle class and to upper-income taxpayers. But his deductions limitation proposal would eliminate most of the benefits, and it would do far more than that. It would strike a severe blow at America's middle-class economic and social system. American homeowners are subjected to heavy taxation not imposed on citizens who own no real estate. It is real estate owners who generally pay most city and county taxes that finance schools, police, fire departments, street building and maintenance, and so on. Moreover, homeowners with the deepest roots and heaviest investments in their community are generally the ones who contribute most to support churches, charities, and other local programs of public benefaction. Under present law, individuals can deduct from their income for federal tax purposes the state and local taxes they pay, the legitimate contributions they make, and the interest they pay on their home mortgages and on other mortgages and loans. Kennedy's tax proposal would limit such itemized deductions to 5% of adjusted gross income, and would also place further limitations on the amount an individual can deduct for medical expenses. The proposal would discourage home ownership and private support of churches and of charitable and educational institutions. It would thus create a demand for more federal public housing, more federal welfare programs, more federal aid to education. The penalties against persons who pay their own medical bills would probably increase public support for Kennedy's plans for socialized medicine. There are other Kennedy tax proposals which seem designed specifically to penalize private efforts to provide financial security for individuals, and thus to stimulate demand for governmental programs. One example: at present, employees pay no income tax on the value of or benefits received from group term life insurance which is given to them by employers. Kennedy proposes to make the employees pay tax on such insurance as if it were income. Time prohibits an item-by-item analysis of all objectionable proposals in the President's tax plan. I have mentioned only a few. As United States Representative Frank Becker said, the President sent his tax proposals to Congress in January 1963 with a flat warning that he must have an all-or-nothing package of tax cuts and tax reforms. He and his Secretary of the Treasury clearly implied that he would veto if Congress passed tax reductions without reforms. In February, however, the President said he would be satisfied with tax cuts alone. There have been many guesses about the President's change of mind on this. My guess is that he did not change his mind. Kennedy's record indicates that his education at the feet of the British socialist leader Harold Lasky went deep, convinced him of the virtue of socialism. Hence, Kennedy wants to finish the conversion of America into a socialist state. To achieve this, he must eliminate the great American middle class, which is the backbone of our system of private capitalism. There are many ways to do this. Increase governmental business and industrial operations in competition with private citizens, harass private business with controls and regulations, burden it with taxation, support monopolistic unionism stranglehold on private business, and so on. A more subtle way to eliminate the American middle class is to subvert our money economy. This can be done by deficit financing, the government spending more than it takes in, with consequent inflation and flight of our monetary reserve to foreign nations until our money is worthless. At that point, the last remnant of America as a free enterprise capitalistic nation will be gone. Kennedy's tax plan in 1963 will take us in the direction Kennedy desires, with or without his proposed reforms. If Congress approves the reforms, it will weaken the great American middle class through tax harassment and discrimination. If Congress approves the reductions without the reforms, it will increase the deficit, which means further speed toward elimination of the middle class by destruction of our money economy. By presenting his tax plan as he did, however, giving Congress repeated warnings against tampering with it, Kennedy leaves himself an alibi if disastrous consequences become too readily apparent. It was Congress that was at fault for not doing exactly what the President originally asked. Now, if, on the other hand, Congress should give the President exactly what he asked, he would, of course, have exactly what he wants. A double-edged attack on the American middle class, harassing them with tax discrimination, while at the same time inflating their currency toward the goal of worthlessness. The only way for Kennedy to lose is for Congress to reject his entire tax plan. The only way for the nation to win is for Congress to take steps to abolish the federal income tax. Goodbye. God bless you. For a printed copy of this broadcast, send 25 cents to Dan Smoot, Dallas 14, Texas, and ask for $3.96. Kennedy's Tax Plan. 6 copies, $1.